Elon Musk visited Giga Berlin today and he gave a little speech over there as well to the employees. To the press, Elon shouted, "Germany rocks." Next time though, Elon should probably wear sunglasses. Here's everything we know so far that Elon Musk said on stage. Elon thanked the employees for their commitment and the rapid ramp up of the plant after the attack by the eco-terrorists. He shouted to the employees, "They cannot stop us." Giga Berlin production is resuming today, and Tesla posted, "We are back" from its main account. Tesla announced a wage increase for Giga Berlin employees and a bonus system after Elon, plant manager, also spoke to the employees and thanked them for their handling of the situation, and it was made clear that a collective agreement is not necessary for the wages to go up. With a bonus system, I am sure the best employees will be rewarded based on their merit. Elon also promised generous leasing conditions for their company cars to great acclaim, and the train service to the plant is to be improved.
Elon Musk is mad at me. I thought the first person interview, no brainer. Elon Musk, the man who calls himself a free speech absolutist. I asked him to do it. He willingly agreed to the interview. Throughout our conversation, I kept reiterating to him that although it was tense at times, I thought it was good for people to see and hear our exchange and that they would learn from our conversation, learn more about him, learn more about me. But apparently, free speech absolutism doesn't apply when it comes to questions about him from people like me. Make sure you watch it on Monday on YouTube.
Here's Elon's response to Don Lemon. His approach was basically just CNN but on social media, which doesn't work as evidenced by the fact that CNN is dying, and instead of it being the real Don Lemon, it was really just Jeff Zucker talking through Don, so lacked authenticity. All this said, Lemon and Zucker are of course welcome to build their viewership on this platform along with everyone else. I am so looking forward to that interview. It will be entertaining. I'll go through a price target cut from one of the analysts, but first let's go through Dan Ives reiterating his bullishness on Tesla stock. We believe the stock is way overshooting on the negative front as the demand story for Tesla is more in stabilization mode heading to the rest of 2024. Price cuts are moderating battery costs and production. These are showing strong cost efficiencies, and a sub $30,000 vehicle is on the roadmap for the next year. He added, "We believe the risk reward is extremely compelling at these levels, with the AI story and full self-driving making major strides at Tesla, and in our opinion represents a valuation that could exceed $1 trillion as this next chapter of the Tesla growth story plays out in the field." He continues, "Now is not the time to throw in the towel on Tesla. We have a high level of conviction at current levels despite the dark black clouds forming." Wedbush said, "We maintain our outperform rating and $315 for the price target." On Wall Street, based on performance, Dan Ives right now is 515. In the meantime, Gordon Johnson remains firmly at the bottom. And how about the Wells Fargo analyst that downgraded Tesla stock just now? Looking at his TipRanks profile, there's a question to be answered. Is he and Gordon Johnson good friends? Because their TipRanks ranking is almost the same. Wells Fargo downgraded Tesla stock to underweight, down from equal weight, with a price target of $125, down from $200. Let's see if they actually have any good points here. Wells Fargo expects Tesla unit volumes to disappoint as price cuts, with its view that vehicle price cuts are having a diminishing impact on demand. The firm also wrote Wednesday that it believes that the economics of Tesla's next generation vehicle, widely known as the Model 2, are likely tough as a mass market compact vehicle. That's one of the most generic statements I've ever heard. You could have said that exact same thing about the Model 3 and the Model Y, and yet Tesla succeeded widely with these two vehicles. This comes after Everscore on Monday wrote that Tesla's new cheaper vehicle may not ramp up until 2027 with 500,000 units in 2026. Tesla increasingly is a 2027 story, Evercore analysts wrote. I would say Tesla is more of a 2030 story, 2034 story, because in the future, I strongly believe, based on all of the data available to us Tesla stock investors, that Tesla's future cash flows, most of them are in the future, and we will have massive growth. So naturally, it would be a story that hasn't happened yet. It's in its beginning still. But anyway, it does make sense why some analysts would be upset with the stock having most of its potential in the future and not in the next 12 months. Now, can Tesla stock go down from here? Of course it can. And I do hope it does. For me personally, selfishly, I know many of you don't wish that, but I am buying more. Inventory discounts in China, says James, that's a first. This on top of all other end of the quarter discounts we already knew about: paint, insurance, interest rate discounts. So effectively, this is a price cut, and you would expect the stock to drop when something like this happens. But zooming out for a moment, by 10 years, is the Model Y going to be the most important product that Tesla will offer 10 years from now? I really don't think so. I think Tesla will have next generation vehicles, multiple vehicles. I think Tesla by then will have accomplished a great deal of things with FSD, which will be producing large cash flows. The business in the energy space will have ramped up. And on top of that, there are multiple wild cards in play. The Tesla bot, Dojo, potentially other projects that Elon Musk gets interested in. And in the long term, even a business like supercharging is actually going to have some impact on Tesla stock, which will be material. Currently, there are only about 2.5 million electric vehicles registered in the US, and the state with the highest EV adoption rate, only 2.5% of the vehicles in the state are electric. This is despite 25% of new vehicle sales being electric. This is because you can have 100% of the vehicle sales be electric, and it would still take you 10 to 20 years to replace every single car on the road. So the supercharging opportunity will take a long time to reflect in the Tesla stock price, but eventually there will be some earnings from that business, and that's just a side business for Tesla. So even if the stock keeps dropping significantly, I feel very comfortable holding Tesla stock because I look at Tesla's future cash flows, and it's just inevitable from what I see that Tesla will be generating lots of money in the future eventually. Tesla is expanding and has now leased another 144,000 square feet of space in Kyle, Texas, near Giga, Texas, giving the automaker over 1 million square feet across buildings 1, 2, 3, and 5. Is this at all related to the next generation vehicle? We know that Tesla is building a pilot production line in Austin, Texas. The specific purpose of this building remains unclear, but the recent job postings in Kyle hint at manufacturing and supply chain operations, particularly related to battery cell production and quality control. And here's another side business for Tesla in the long term: a battery business. That one is a tough business, of course, but if Tesla can nail 4680 production with a dry battery manufacturing process, there is money to be made here. One more thing, we know that Tesla does have quite a bit of cash on hand, and the Las Vegas Convention and Visitors Authority has approved 2 significant expansions of the Boring Company's Vegas Loop, a move aimed at alleviating traffic congestion in the city's busiest areas, including the airport and the Las Vegas Strip. Couldn't Tesla just buy the whole Boring Company or acquire a 51% share in it or something like that? I'm not saying do it, but maybe it's something that Tesla should at least entertain, especially because when robotaxis will be solved, Elon Musk believes that traffic will get a lot worse because getting around will become so much cheaper, that more people will have places to go.
And I find it so funny, all these Raptor people being like, you know, the Cybertruck can only tow this many pounds, this many minutes. And it's like, when was the last time you towed? You bought your truck because it's cool. Now this person's doing the same. You're just mad because they upstaged you.
But also, Cybertruck is going to be very useful at construction sites because it's just so difficult to damage it. And also, it's cool. Seems like Ross Gerber expects Tesla stock to go down to $120. He's not explicitly saying it, but he's sort of saying it. Another reality is Tesla profits are now growing, and now $3 for this year looks questionable. Why should Tesla have such a high valuation? That's what the market is assessing. 40 times $3 is $120, and everyone else's multiple, but with high growth rates. In the short term, the stock market can get extremely irrational. If it does happen, I will be certainly taking advantage of that opportunity. And look, Dan Ives often gives his price targets out based on the sentiment. And despite that, he strongly believes in Tesla stock still being an opportunity even in the short term. We believe the risk to reward is extremely compelling at these levels, with the AI story and FSD making major strides at Tesla. Ross Gerber though says there is no AI story, so Tesla stopped working on FSD completely, I guess, based on that comment. Elon is clearly using AI resources in a place he controls 100%, XAI. Tesla has no AI program, and FSD still doesn't work completely, even close. Elon has made it very clear he will be building AI outside of Tesla, so Tesla is definitely not working on the Tesla bot, for which it needs AI to work, and Tesla is definitely not updating FSD to 12.3, which Elon says should be arguably called V13, because, you know, there's definitely no progress made here. I understand, though, the frustration that Ross is experiencing right now. Elon did say that he's not exactly a fan of building AI products at Tesla if he cannot control 25% of Tesla. Now, looking at recent tweets from Elon and posts that he's making, which a lot of them are actually about Tesla, even posts that are not exactly big news for Tesla, but they are just interesting posts. Like this one: thanks to the hard work of the Tesla Giga Berlin team and support from the community, the factory is back online. This basically is completely irrelevant to the public. But yet Elon is retweeting this, and it reminds everyone of Tesla. It helps with the morale at Tesla. It helps Tesla recruit more talented people. And this is Elon sort of predicting that FSD will be solved relatively soon. AI will probably be smarter than any single human next year. By 2029, AI is probably smarter than all humans combined. Elon is posting Model 3 is more affordable than most people realize. Now, of course, these posts are followed by a lot of other things, but there's no denying the fact that Elon is posting a lot about Tesla, and that, I believe, is helping Tesla. But more importantly, to me, that represents Elon's commitment to Tesla. And anything that Elon focuses on for a long time, continuously, eventually, that thing takes off and works in a big way. So I would definitely not bet against that. And if I wouldn't bet against that, that means it's a good idea to bet in favor of it. My assumption is the reason why Elon Musk is posting so much more is because he probably talked to the Tesla board and he has some sort of clear agreement of how Elon will be able to increase control of Tesla, making him happy about it, and therefore having him focus on Tesla again. And he did say that he's not happy building AI inside of Tesla if he controls less than 25% of Tesla. So if he can get that control back, the natural assumption would be that he will be building AI products. Maybe not all of the AI products, of course, but some, yeah. And if you believe in AI, then naturally the bots, humanoid robots, will be a big part of our future, and Tesla is well positioned to take advantage of that future. Now, there is some progress being made with judge that rescinded Elon Musk's compensation. She admitted that she received many communications from Tesla investors about her decision to rescind Elon Musk's 2018 pay package and about the lawyer's request to be paid $5 billion in Tesla stock. The judge, however, has reportedly noted that she's not reading any of the shareholders' letters, but that does not mean that it did not have any impact. So don't think that your letters went to waste. Definitely not, because she sees, oh, people actually care about this decision. I'm getting letters. Maybe she's not reading them, but maybe she read at least one. She at least has an understanding that people are not happy with what she's doing. But anyway, I think it's more about the number of letters that she's receiving and not about what's being said in the letters as much. For any comedians watching this right now, please pay attention and take notes, because the explanation the judge in terms of why she's not reading the letters is something you can add to your material. She reportedly noted that the state's judiciary code prohibits me from considering the letters from non-parties in the litigation who claim to hold Tesla stock. The judge's comments have been received with some raised eyebrows from Tesla shareholders on social media. Some noted that her comment about non-parties in the litigation are particularly interesting. After all, her decision to rescind Elon Musk's 2018 pay package was reportedly done to protect the interest of Tesla shareholders. It is then quite strange to see the judge opting not to read letters from the people that she is protecting. And the ethics code also prohibits her from donating to political campaigns, but she did. You can look it up on this website. Okay, so I just searched for her name, and I'm not exactly 100% sure if this is the same person, but it is in Delaware. Occupation is attorney. Recipient information, Democratic Party. Assuming that this is the same person and this is the judge, which I'm not so sure if that is the case because it says not employed and occupation, not employed. But the latest donation I see here is from 2020. So donations made in 2020 would not exactly look great on her resume. And there is one donation for someone running for Congress, but this is from 2016. And that specific record is definitely from her because she worked at this law firm. And as you can see, this is that same law firm. And clearly she's donating money to a Democrat. And here's another donation for someone running for Congress, also a Democrat. So I think politically it's extremely clear where she stands. And lately Elon Musk has been making a lot of the Democrats angry. So naturally she would have a negative impression of Elon Musk. And I think that reflected in her judgment. Gary commented on today's Tesla stock noise. When a Wall Street analyst downgrades a growth stock to a sell, it's more often than not a reflection that near-term expectations, volumes, revenues, earnings, are too high, rather than a longer-term view that valuation is too rich. Gary just took an FSD ride with Bradford, took a mostly autonomous ride through the most difficult sections of Chicago with Bradford, courtesy of FSD V12. My conclusions: smooth, confident, generally intervention-free, but gets stuck occasionally when it encounters cement trucks, semis, and roads closed due to construction. Ran a few stop signs where there were no cars coming the other way. Very comfortable letting FSD V12 drive in Chicago city traffic. By ran a few stop signs, I assume Gary means it slowed down, but it did not come to a complete stop. I assume it came to a comfortable stop, a rolling stop. He did not mention that explicitly though, but that's what I assume because that's what FSD often does from the videos that I've seen. And look, it's no longer a question, will FSD work? It's working already right now. For example, Waymo operates autonomous vehicles with LiDAR, so it's incredibly expensive and it's not really feasible to scale it quickly. The question now only remains is, how exactly will it be solved? And I believe the vision-only approach is going to prove to be the best way to go about it in the long term to scale to every city in the world. Elon replied with major improvements to this post from Omar. So excited for V12.3. Hope it fixed the slowness and hesitancy of 12.2. A Tesla full self-driving timeline has been shared. Elon actually replied with exactly to this timeline. Number one, it's impossible. We are over that right now because Waymo has done it. Oh, it's a gimmick. Some people still say that when we look at Waymo. Number three, only works outside towns. You haven't tried FSD if you think that. Disengages all the time in cities. Number five, drives like a teenager. With FSD 12, likely this is where we are right now. Sometimes does something weird. That's coming. Number seven, doesn't work well in Sri Lanka. I have some of my friends actually visiting Sri Lanka right now. They loved it there. Number eight, my grandma still drives manual. Number nine, when I was young, you drove the car. When I was young, elevators had people operating the elevators, but now you just press a button and it just works, and it will be exactly the same with cars as well. You will get in a car, enter your destination, and the car will take you there. James says, how do people see these patterns on a chart and think technical analysis has no merit? I agree with this below. We got the obvious mode, we got the obvious boat. Looks like the boat is about to give way because if that bear flags measure moved comes to fruition, downside should generally equal length of the flagpole. Then 144-ish gap fill is definitely in sight. So that's the boat. His point is, if we close significantly below this line, that would be a negative for the stock in the short term. If technical analysis really works, what we should see is Tesla stock rallying back to this trend line just like it did here and then here. And it sort of tried to do that here, but it didn't go all the way here. I will let you in on a little secret. About 10% of this channel's viewers are women. So to all of the girls watching this, I hope you enjoyed this stock astrology segment. Porsche CEO says that we are overwhelmed by orders coming in for the electric Macan. We are confident it's going to be a hit. They received 10,000 orders for the new car in 4 weeks since the Macan made its debut, which would be about 200x fewer than Cybertruck orders. If you remember, Tesla has received 325,000 pre-orders for the Model 3 in 1 week, not 4 weeks. Elon Musk says cool about Doug DeMuro reviewing the refreshed Model 3 and calling it the greatest appliance ever made. Not particularly the most exciting car to drive, but the best car ever made that can get you from point A to point B.
This isn't an exciting car, not a particularly fun or thrilling one, not a car that arouses your passions, but it is a great car for its intended purpose, making commuting as easy and simple and pain-free as possible. That's what it's for, and that's what it does fantastically. And the Doug score is here, 63 out of 100, which puts the new Model 3 here against rivals. The daily score is tremendous, 38 out of 50, which beats out everything else on this list.
Yeah, Doug definitely likes the new Model 3. And that's it for today's episode. Thank you so much for watching. Like and subscribe if you haven't yet, and I will see you in tomorrow's episode.